Hey guys, this is Vic from Grasping the Market and welcome to our market briefing. As we prepare for the week ahead, I'd like to start our usual top down approach with the monthly chart because on Friday we had a significant change. We finally took the previous month high by a few ticks and that denotes change. You can see here that the weekly we've now been trending one time framing up for the last 3 weeks. And on the daily, although we had a little bit of consolidation around the 3000 area, it was always putting pressure to the upside. And on Friday, we had a final move towards the 30, 24, 25 area. We took it briefly and we settled slightly below it. So all three time frames are pointing strongly to the upside. And as we mentioned a few months back, there's almost like a relative weak excess at the top, and you can see the proximity of all these highs. And you had some backing and filling last week on Friday, and this week we charge up towards this 30, 25, 30, 32 area. So I think that the market is in a very strong position and is making this move ahead of the important key data to be released this week. Here at the continuous chart, you can see how the 3000 area served as support earlier in the week. And on Friday, we saw that final push through the 3015 area, which was a strong resistance there. But you can see that the more we tested that resistance and we came back, the lows became higher and higher, putting pressure there. So Friday, we finally saw that ending move. And I think that the odds are pretty good. It would be pretty surprising that with a 4-month and highs clustered in the 30-32 area and no excess there, and the amount of weekly highs on this area, we don't at least probe above the 30-32 and make new highs. The events happening this week in the form of the GDP, FOMC, non-farm payrolls definitely carried enough ammunition for the volatility to make that happen. So I'll get back to that quickly, briefly. But if we look at the market profile, you see that actually, before we go there, this area over here, the 3000 area, was continuously hammered on the last couple of sessions of the week. And as we open on Friday, I was paying very close attention to the behavior and the location around. You can see the 3000 right here. My initial thought was that if this how do you call it? Sorry about that. This clustering that we had here, you see the market in contraction was not able to advance to the upside, and this 3000 area became challenged at the open. That was possibly going to be a very strong move. And also on Friday, we had a prominent overnight POC, which was overlapping with Thursday's POC and the value area. So my initial thought is if we're opening below that, let's call it fair price, which it is, we open at 3,001.50, very close to the 3,000 area. I thought if we open and we don't immediately revisit that consensus value, but instead we challenge the 3000, that could disclose market weakness and the market could trigger potential stops below and go lower. Now that didn't happen. It happened exactly the opposite. So sometimes it's a matter of what is likely to happen and what is unlikely to happen. I thought if this move didn't happen, the possibility was that we move strongly to the downside. But yeah, we opened, and as logically as it sounds, we went to the consensus value, and that encouraged some buying, and at the same time probably squeeze some people betting on the short side, and that was created the explosive move to the upside. Uh, so leaving that aside, we push through the profile and create a separate distributions and settle up here in the 30-20 area with a separate distribution above the key 30-15 area. And that held through the session, leaving a very questionable 2-tick excess at the top. So that suggests that the move is not done. It was a little bit a bit emotional the way it went up, but it held its ground. So focus for the week ahead, or for the start of the week at least, is on this upper distribution that we have here, with acceptance within or above, increasing dramatically the odds that we will test the all-time high for the contract at 30.3225. If we do close this double distribution, and if we get acceptance back below the 30.15 area, that denotes change, and that would constitute a rejection of this level over here. Now, ahead of the key risk events, and I will focus first on the FOMC. A lot can happen, adjustments on the big portfolio. If that's going to happen, that's going to happen likely tomorrow, and it's probable that from Tuesday and Wednesday morning you see a very quiet market ahead of that key event. The market seems to be positioned well. Also, what helped the rally is that some positive news on the trade front. One of the top officials disclosed that on the phone talks there was kind of an agreement on a draft for the deal, so that pushed up. But remember that now you have the other front playing on, which is the US economy, what the Fed is going to do with the rates, and is the economy strong enough for the moment. That will be, you will have some data on that on the non-farm payrolls, and also as well playing its part on this market. You have the month-end flows towards the end of the week. So you have a lot of things happening, and I would say that you need to be very careful, because you could see some strong moves ahead of these events and during these events as the market positions for the next one. So my advice is which is not advice, it's just a general consideration, is be conscious of the risk appropriate positioning for your account, and do not use all your ammo, because a lot of things can happen after this data is released. Once the market digests, there's plenty of opportunity. There will be plenty of opportunity. You don't need to be involved during the data release and during the high volatility event. So plan your week well, manage your risk. Remember, as we always say, odds are just odds, and anything can happen.